Very good morning to everyone. I would like to extend a warm welcome to all of you and to our incredible panelists. Welcome to the Capital Club. Welcome to this panel, SMEs and liquidity. SMEs are the backbones of economies, representing 90 to 99% of all businesses globally. They account for over 70% of jobs in developing nations and contribute over 50% to GDP. The GCC countries, 95% of all businesses are SMEs, accounting at least 50 to 60% of jobs and contributing to GDP ranging from 10 to 35%, except for the UAE, which is a bit higher, or 60% for the non-oil sector. Despite this importance, the SMEs have been underdeveloped, underserved by the banks for way too long. Globally, funding from banks to SMEs is estimated to be around 22%, but in the GCC, it's less than 3%. Some may even say it's less than 2%. So it's an enormous liquidity gap, estimated to be around 250 billion US. Now, this is not a new problem in the region, but there are transformational game changers. The ecosystem in the SME world is evolving. The legal framework is advancing fast, and there are numerous government initiatives taking place, supporting the SMEs, making it a more inclusive and dynamic business environment. Here, from the government, from the private sector, including private credit, banking, financial services, consultancy, and a lawyer. Before we dive in, I would like to ask the panelists to provide a very brief intro. We'll start with you, Zubair. Thank you.
Sure. Thank you, Lara. Good morning, everyone. My name is Zubair. I've been in the industry of banking and technology for 32 years, in Dubai for over 4 decades, so I know the region and I've seen the region grow. Real pleasure to be with you today.
My name is Abdullah Al-Hamid. I'm from Emirates Development Bank. We're a government bank that mainly focuses on 5 key priority sectors, which is manufacturing, healthcare, advanced technology, food security, and renewables. As a development bank, our main aim is to grow the non-oil GDP in the UAE with the target of support or providing funds of 30 billion by 2026. I had the pleasure to working in Emirates Development Bank for over 4 years, where I've been exposed to both supporting from startup companies up to large corporate companies.
Good morning, everyone. I'm Omar Liawar with Ru'ya Partners. We're a Abu Dhabi-based private credit firm. We established in 2020 with the help of Mubadala Capital as our anchor investor, and really our key focus is mid-market lending. We do entire GCC, but really the lion's share is between UAE and Saudi Arabia, given the fact that they're 2 biggest GDP contributors to the region. What we're solving for is financing where banks are not able to finance these SMEs, particularly the M, not so much on the S for this particular fund. Happy to be here.
Yeah, my name is Mubarak Kubaisi. I'm the founder and managing director of Perhaps Consultancy. We're specialized in providing consultancies to SMEs. We started from Bahrain in the last decade. We are operating now all over the GCC region. We have clients from SMEs and every government entities. We enjoy working with our clients to give them sustainability and profitability in the long term.
I'm Tim Person. I head up the Gowling in the Middle East. We're an international law firm, mainly Anglo-Canadian, with 3,000 lawyers across the world. We've got 50 people here in the Middle East. I've been here 16 years and do a lot of work with venture funds and SMEs looking for investment capital.
Thank you. And I'm Lara Sif Rafkelsdottir, founder of Viking Group Management Advisory, focusing on private funds, SMEs, and family offices in the MENA region. Now let's dive in. Zubair, I will start with you. You have written an SME paper about challenges and opportunities for SMEs and banking. You worked on this paper for other regions as well as the GCC region. Can you share some of the main findings and some of the solutions and models that you came up with, and if you can compare it to other regions and see how GCC is doing in comparison?
Sure. So Lara, this work started 2 years ago, where we started with the hypothesis that are the SMEs really underserved? So obviously we had this feeling, but is it the norm around the world? So we joined hands with 100 plus banks in the world, all the way from Australia to Canada, South Africa, to look at different regions and different mechanics, banks of different sizes, different maturity levels, different baggages, obviously serving a different market segments, and started doing this study. So our hypothesis got verified quite early in the game, that yes, indeed, SMEs are underserved across the world, because banks naturally put more focus on retail banking, where the masses are, or the corporate banking, where the money is. And the solutions drafted for SMEs are usually tweaked from the investments done on those two bigger segments. So SMEs do not really get the solutions from banks as a partner to grow their business. It's almost like a transactional relationship of give me credit, open me an account, pass my remittances. So that has to change. So what we did was, after 6 months of work, intense work, we produced a 30-page report, which is a standard, which is a maturity model for any bank in the world to pick up this free IP and draft their strategy forward. So it helps you assess as to how your SME segment is framed around 6 dimensions: acquisition, servicing, customer experience, value proposition, and so forth. And then see where you are and where you want to jump, how far you want to jump, and then conduct projects to take you there. And there are a lot of case studies within the model report as well, where banks who have actually done that. So the problems are very similar from our region to others, where if you continue to look at SMEs in a single transaction fashion, then it comes down to underwriting the demand. But if you look at the holistic profitability of that customer to a bank, then it completely changes. It's a loyalty-based proposition. And some banks have started doing it in the last 2 years. The report was actually published in Milan, June of 2023. It's been used by many banks in the world. Please message me if you would like to have a copy. It's a free copy, it's a soft copy. Maybe I can do a post as well to share the report with everyone. But that report or that model can help banks address this need in the market. That was the idea.
Amazing. Thank you. And is the GCC pretty advanced if you compare it to the advanced countries, for example?
In the entire spectrum, GCC would be in the middle. Yeah, so we have seen much weaker examples in some parts of the world, but we have seen some very advanced. For example, Millennium BCP in Portugal is opening an SME account without asking any data from the customer, 0 data, because of open banking and open finance, right? So there are certain things, the rest of the world is slightly ahead from UAE, from Saudi, but we are getting there. So those capabilities of technology are favoring them. CIMB in Malaysia is sub-segmenting SME segment into 18 segments, 18 sub-segments. And each sub-segment has a different value proposition, different channel strategy. Not many banks are doing that, right? So there are many examples where we saw a really level 5 maturity, but we can now we know. So we can know what are the components that go into that capability building. And what we've seen in the last 2 years, banks in UAE, there are a few who have really took the model and they are shaping their capability increase on top of that.
Great, thank you, Zubair. Abdullah, the government and the GCC region have a lot of initiatives supporting the SMEs. And now you're with the Emirates Development Bank. Can you tell us how Emirates Development Bank is supporting the SMEs? And if you can share highlights on financing program, how it works, and who is eligible? What's the application process?
So I'll take everybody back to 2021 since the launch of the new strategy from Emirates Development Bank. We were mandated by the government to support 5 key priority sectors that I've mentioned earlier. And we decided that these are the sectors that we would like to see and grow in the UAE, with a target deployment of 30 billion dirhams. So far, we've deployed 16 billion dirhams since the launch of the strategy, focusing on the 5 sectors, the 5 priority sectors which are considered important, and with an emphasis on not only focusing on the large corporate, but also the mid, the small, and the micro. Now, this was our initial target. Now, how did we start? So when we look at the startups, they're not eligible for lending. So what we did with them, we started a bank account, what we called EDB 360. It's a digital banking application. Any company, any small business can open their bank account within 48 hours. And this is throughout all sectors. And now when you will request for a loan, then you have to be part of the 5 sectors where you can enter the application, request for a loan. Within 5 working days, you will get the reply on the requested documents and whatnot. Second is we don't compete with the commercial banks. We have partnership with over 10 commercial banks. Now, how do we partner with the commercial banks? We have what we launched, a credit guarantee scheme, where we guarantee 50% of the loan or up to 10 million dirhams. So now when an SME would request a loan of 6 or 8 or 20 million dirhams, for example, and that commercial banks, based on their policies, that cannot lend more than a specific amount, we say, no, we're willing to take that risk. We're willing to guarantee 50% of the SME, where we allow, for example, any commercial bank to double their exposure with them with a guarantee from Emirates Development Bank of 50%. So we have that program running. We've reached out to many SMEs. We financed many SMEs, or we guaranteed many SMEs for this program. And by default, the SMEs are the only one that is eligible for the program, because the large corporate or a large organization does not require a guarantee of 10 million from Emirates Development Bank. So usually the average ticket size would be between 5 to 30 million dirhams or up to 10 million, whichever is higher. So this is the second program that we've done. The third program that we've done regarding to the food security. And this is also for UAE farmers, where we said, okay, there is a food security. We live in an arid region. We want to support farmers. We want the farmers to think like businessmen. We want to support the food security sector. So what we did is we did an accelerator program. We took 2 farmers, and this was the pilot program that we did. Now we're expanding on it. We decided to onboard the 2 farmers and commercialize their farms. And the way we did that, we brought 1 technical person. He improved the farm, he improved the production. We supported the farmer himself doing matchmaking with the big corporates to sell his product. So these are one of the several programs that we do. Now, in terms of lending, we do also direct lending. We look at 2 things. Okay, we have 5 sectors, and the good thing is our organization, we have a capable team of understanding these 5 sectors, from the business side up to the approving side, the credit and the committees. So how we approach it, we said, okay, today a factory can get a commercial loan up to 7 years. But generally, that's the loan amount and that's a term loan. We can go up to 10 to 15 years. We want to support the cash flows of this entity. We can give grace period up to 2 years. And not only that, when we study any case, we don't look at the commercial side of it. Although the commercial is important, we need to make sure that the customer is able to serve the loan, and the business model and the business plan is solid. But also we look at the developmental impact of the product. How much he will be exporting, how many experts he will be bringing in the market. Is he going to source his raw material locally? Who's his customers? All of this plays a part to increase his eligible or his developmental score, where he will have advantage in not only the tenor but also the interest rate. So we have several programs working side by side, and I'm proud to say they are successful. We had a lot of positive results on it, and this is why we reached the amount of 16 billion dirhams so far. So this is in a nutshell of different programs that we're doing, and also we have plans to even do several newer programs. Again, we have no shareholders. Every profit that we get as a development bank comes back to the bank to subsidize different programs into supporting SMEs. So this is our view on things, and this is our strategy.
Thank you, very insightful. Omar, from private credit, the private credit market has been evolving and growing globally the past few years. It's estimated to be around 2 trillion right now, likely will double or even more by 2028. Given the challenge here in the GCC region, the banking challenge for the SMEs, this is a big opportunity for the private credit, and it has been evolving. Can you share some light on how the private credit market is evolving in the region?
Sure, thank you very much. You know, while the lovely numbers of 2 trillion plus in global private credit is quite enticing and exciting, we're just in the beginning stages of private credit reboot in our region. To give you more context, the first runaround of us growing the private credit ecosystem was back in 2007, 2008 period, where there was a bonanza of private credit managers like ourselves that came up. Most of them are not around anymore. But the issue still remains. The challenge or the opportunity set is still there since 2007 plus, which is the typical commercial banks, the 54 banks that we have in the UAE and many more banks in Saudi. I'll just focus on those two markets. They focus on two main segments of investors or clients that they finance, either big government-backed projects or big family groups that they've known for many years. So what's left is in the SME segment, where either the very S or the very middle, what we focus on, $10 million of EBITDA and above. For them to grow organically is quite tough, even despite the fact they're cash flow positive. So they need flexible financing that typically private credit solves for. So the opportunity set now, because two main things have changed in 2007 to today, is that the visionary leaderships in the UAE and Saudi both have had transformational visionary plans to grow the ecosystem much stronger than before, where there's a big emphasis on SME to grow. And for it to grow, they either have their own, these founders or entrepreneurs either have their own family financing them to grow, or having folks like us enable them to grow. So what we're solving for is giving folks 4 to 5 year flexible finance, similar, not probably the same terms, but giving 2-year grace period, maybe 3-year grace period, looking at the cash flow of the business, where most lenders, most commercial bank lenders typically look at hard assets. Give me a building, give me land, give me other properties, give me personal guarantees. They don't really look at the cash flow of the business. If you're doing an M&A as a business, you're buying your competitor or peer. They don't look at 1 + 1 = 2. They look at just the soundness of one business rather than the combination of two. So we're flexible. We're partnership mindset. So we are owners of the business ourselves. So what that does is that we're trying to replicate what's worked in the West so beautifully. To give you an idea, in the US, which is the deepest market for private credit, both from an allocator as well as demand, there's been so many different programs focusing on SME growth, because they know that's the backbone of any economy. It's not the big companies. The big companies are important, but to get to the big company, you need to actually have financing that serves different stages of the growth of the business. So there's one example that I spoke about a few months ago before Ramadan was in the US at this FII event, was this SBIC program in the US, where the federal government in the US goes to funds like us, where sub $500 million, and says, okay, you're lending to SMEs, you're lending for companies that are 51% investing in the US. You raise 200 million, we'll give you 2-to-1 leverage using 10-year treasury notes rates for you to be able to finance. So me as a funder, as an allocator, or as a provider of finance, my cost of financing got a lot less. So to give you an idea, what I'm solving for is my current investors demand for 15 to 18% returns for coming into my fund. So that's my cost of capital, which is quite high for some firms that, they want to pay 10 or 12, but 10 to 12 is probably not possible for a firm that's generating 10 million of EBITDA in the region. So what you're facing is, what we're doing now is we're replicating a lot of the Western models that have worked here. We're doing the same thing with across all sectors. We've done fitness, we've done healthcare, we've done education, and the opportunity, and we're just getting started. Again, there's only a handful of us doing it here. Our old firm that became Janus Henderson, which was MBK Capital, got acquired. But now you're also seeing institutional investors from the West. You heard probably recently, 2 months ago, Goldman Sachs was backed by PIF to start a private credit fund in the region. The who of who globally are trying to come in here because there's a real growth story happening here. There's a real SME emergence that's happening that has not been seen for the last 40 plus decades because of the focus of the government as well as the ecosystem we have.
Thank you. This is very insightful. And to add to that, the sovereign wealth funds, major players, if we look at the sovereign wealth funds assets globally, 40% is in the GCC. And the sovereign wealth funds invest in private credit funds and private equity and venture capital funds, who are all, or many, investing in the SMEs. So it's clearly an indication for a lot of growth and opportunities.
Sorry to interrupt you, but to add to your point, which is an excellent catalyst that's been happening, is that historically the regional sovereigns never really invested in private credit assets locally. They did it internationally with the best names, great, nothing wrong with that. But for the first time in 2020, we started seeing a shift in that because they also started noticing that there is a shift in where the focus of the country is. So people like Mubadala Capital, but we were fortunate to gain them as an investor. From Saudi, similar names, whether it's Aramco's pension, whether it's SVC, Jeddah Fund of Funds. So names that never historically invested liquid inward. And the next phase, the next 4 or 5 years, I think they're going to see even a bigger participation of local allocators to empower folks like us to, at the end, help the ecosystem in its entirety.
Exactly. Fantastic. Thank you. Mubarak, you have your SMEs consultancy firm. You're operating in Bahrain, Saudi Arabia, and you recently expanded in UAE. Can you tell us how you support the SMEs? And is it similar in the 3 countries or in the GCC? How do you support them?
Yeah. First, it goes without saying that in the Gulf region in the last 2 decades, government has been very keen and committed to diversify the economy from an oil and gas dependent economy to a diversified economy. Many funds, like in Bahrain, we have Tabteen Fund, we have also Bahrain Development Bank, Bahrain Business Incubation Center. In UAE, there is Khalifa Fund, Shirah in Sharjah, Rawad in Sharjah, Sheikh Mohammed bin Rashid, the Foundation for SMEs in Dubai. In Saudi Arabia, they have Munshat and many other funding institutions backed by governments in the GCC region. So our services are focused on providing consultancies for SMEs and even like government entities about how to enter the market, giving them insightful data about R&D, business plans, marketing plans, and development plans. So across the 3 countries, when we compare, like for example, Bahrain to Saudi Arabia and UAE, well, in Bahrain the market is small. So it's all about having like the right approach to the market, having the right plan, building a sustainable business model to survive in the market. In Saudi Arabia, it's a different landscape where there is a huge buy-in from the government. We are partnering with a Saudi company, which is also consultancy, financial and administrative services, called OceanX. We're all helping SMEs with giving them reporting about the market, insights about the market, like the size of the market, the nature of the market, the growth opportunities, the risk and other things, so they can keep it in mind before entering the market, or for longevity and for sustainability in the market. In comparison, in UAE, it's very diversified because UAE, compared to other Gulf countries, it's multinational market. So in most Gulf countries, locals are forming the majority of the people in the country and in the market as itself. But in the UAE, we have very diversified population. and businesses from the multiple nationalities. This has its own impact on the funding procedures. For example, in Khalifa Fund, they are funding SMEs for locals, basically. While in Dubai with the Sheikh Mohammed bin Rashid Foundation, they are giving some exemption and allowances to businesses. While, for example, with Shira and Sharjah, they are giving them like building an ecosystem for SMEs so they can collaborate with each other, which will cut the losses for them. For example, we worked with a Kuwaiti company who was looking to expand to the UAE market. So we faced many challenges in comparison between Kuwait market and UAE market. So we helped them in connecting with Shira. Shira gave them some introducing to their community and their ecosystem. So in Shira, they are connecting, for example, if a company is in the food and beverage sector, they are connecting with companies which can give them like some other services which they may need. For example, logistics and products that they may need in their projects. So they will help them to cut the losses and increase revenues.
Great, thank you. Do you help or support them securing financing? And if so, do you generally then work with the banks or government?
Part of our work as consultancies is to give them like plans. For example, if we go for like feasibility plan, feasibility study, marketing and business plans and studies. So, for example, when they are going to get funds, by default, they need some kind of feasibility plan and feasibility study, business plan and study. So when we are providing them with these plans and studies, we are basically helping them to get better chances of getting funds.
Exactly.
Yeah.
Great, thank you. Tim, so the legal framework is advancing fast in the region. If you could share some highlight on the legal framework where it's at, and especially comment on the new updated financial restructuring and bankruptcy law that was updated in 2024, that would be much appreciated.
So I think the government's supporting SMEs for a number of years, and in fact in 2014 they brought in a law specifically supporting SMEs, and as an example of that, federal entities had to contract, at least 10% of their contracts had to be with SMEs, and if federal entities own 25% of companies, those companies had to contract with at least 5% of SMEs. So that's been around for quite a while, and actually Vision 2031 is also very much supporting SMEs. I think a lot of the changes sort of at a macro level really have helped support SMEs as well. So whether it's changing to a Monday, Friday week, obviously that supports SMEs looking to do work internationally. The requirement, no longer requirement for a 51% local partner for onshore companies, that makes a significant difference, particularly for international businesses looking up to come in and establish their entities here. So there's been a track record of significant changes, and I think the new insolvency regime, bankruptcy regime, is another real extension of that. It'll be interesting to see how that kind of really plays out over time, particularly for SMEs. But I think at the moment, what it does do is give an element of certainty. So for private credit companies, there's a bit more certainty around an insolvency process and what that looks like. And that certainly will give confidence to lenders to support SMEs. And I think actually going to Omar's point, interestingly, the law talks about cash flow insolvency rather than asset-based insolvency. But I think that's kind of a reflection of the market here is too, because outside of property, really, a lot of the businesses are would be sort of asset light, I'd say. So from a lending perspective, that can be quite challenging. But I think that sort of formal process is really helpful. I think there are areas that need further support still. So there's no real opportunity to appoint an independent sort of liquidator administrator in the same way that you'd have in the UK. And that sort of facilitates a quick turnaround of an insolvency position into sort of the rebirth of the next business really. So you could have kind of these pre-pack insolvencies. That's an area that could develop further, I think. There's areas like IP, which is underdeveloped here. It's still quite expensive to register your IP here. It'd be great to see that sort of changing. But I think the support from the government's been really impressive, and the way that the government legislates and has legislated over the years has really been supporting SMEs. And we don't only see it from a kind of legal legislative perspective, we see it from clients as well, the way they're supporting SMEs here. So we act for an Abu Dhabi fund, and it's really interesting the way their approach is to invest in overseas technology, license that technology back here, and then they're creating manufacturing facilities for those technologies, or they're selling those technologies into the region and into the Abu Dhabi ecosystem. But what they have the benefit of as an Abu Dhabi quasi-government fund is the whole sort of Abu Dhabi ecosystem and support system around them. And so that really encourages growth and building companies within the region and sort of taking that step further. I think it's Omar was alluding to earlier, that there's a real maturity now in the approach to investing. And these are really the primary purpose. It's actually building manufacturing plants in Abu Dhabi and actually having manufacturing and IP creation here in the UAE, and that's great for the economy, obviously, and the diversification of the economy that we talked about.
Thank you. No, it's great to see how the legal framework is advancing, and it's making the environment more attractive for investors, especially foreign FDI is increasing, and that's critical. Zubair, if I come back to you, how do you see the future outlook for the banking? I mean, especially given technology plays a big part. Can you share some insight on the outlook, where you think they're heading?
Sure. And before the tech, I think it's good to understand the business capability. As Abdullah and Omar mentioned, sovereign focus, as you mentioned, 40% of the world's sovereign here. Now sovereign's focus in the last 3-4 years on SMEs and local investments, private equity, is all good news. So money is there. But the way you serve an SME as a bank, that model has to change. And the service is not with the single transaction of giving credit. There's a lot afterwards, the entire servicing. And even before the servicing happens, how you look at the customer has to change. So for example, let's take an example of this room, right? All of us are retail customers, right? More so, credit card holders, some loans here and there, current account, savings account. Then you might also be a director in a corporate company somewhere, maybe an equity partner, maybe having board meetings, maybe doing decisions on the side. You might also be an entrepreneur. So you have an SME of your own that you own and operate. And fourthly, you might even be a private investor, right? Now, you clearly have, you're the single person, but you clearly have 4 banking personas. And what a shame if your bank sees you as 4 different people. And that's where the problem happens. So we as growth customers of banks, if we are seen in a slotted, segmented manner, then the bank is impaired in giving us the services that they can potentially give us. And that's how some markets in Canada, in Ireland, there are so many examples out there that we can learn from as well. Saudi has started working, like Abdullah mentioned, with the good work that EDB is doing, is starting looking at the customer as a segment of one, where the customer feels that the bank doesn't have any other customers than him. You serve me so privately, so intimately, so uniquely in all aspects. So this is extremely important. This is one. The second aspect is the advent of technology and the policy opening. And a great example is the SME bank in Saudi. A bank formed only for SME with a vision to enable funding. And what they did was not alone, very, very similar to EDB model, where they put in their own skin in the game. So they fund 20% and let the banks own their relationship of 80% credit. And there's a single portal, SME portal, where any SME in Saudi can really sign up to that portal, create a dialogue with SME bank portal to get validated at the first line, and then select from a list of banks that they would like to get the credit from. And I think that's great news. And this started about a year back. So that will promote the use of technology in a way where policy and technology kind of meet together. And it's not about AI and cloud, and none of that matters if you're not getting the support from your bank for your daily operations and for injection of growth.
If the other GCC countries would implement a program like that, if it's not taking place already. The same thing, with private credit, Omar, in terms of having a portal and leveraging the technology. I believe there are such portals in private credit vehicles being set up in AGGM and DIFC, right? Can you?
I believe so. I can't speak to that directly, but what we've been seeing, at least internationally, is the use of technology, particularly for quickly assessing the cash flow soundness of a business on the SME segment. So they're able to get, if they plug into your accounting software, they're able within a day, 2 days time, assess, okay, this is your, for lack of credit worthiness structure, they're able to say, okay, you can actually sustain a $5-10 million loan over X period. And we saw that from one group, actually, a regional one called Liquidity Partners. They do that. They do that well they're probably the cutting edge in terms of regional exposure, at least. They've done some deals in Saudi, they've done some deals here. But the technology, because we're still at the infant stage, frankly, for private credit in the region, there's still so much just pure, direct lending type of strategy or direct lending kind of need that we haven't serviced yet. So to give you an idea, in 2008, when we first launched our first fund back when we were at MBK, we used to see about 150 million worth of deals a year. That would be a fantastic year. Not that we can do all of them, but that was kind of the size.
Mm-hmm.
Today, we as just a 7-person team, we're seeing $2.6 to $2.7 billion a year. Of that, we're only doing 4 to 5% of them because of the reality of how much dry powder we have relative to the opportunity set. So the real story here is there's still so much demand that's not met, even without even the need of using technology per se, particularly just meeting these companies, using an Excel-based model to look at their cash flows and say, all right, let's do something. So technology could help, but I think we're still even a long ways away from just servicing the current growth needs. I'm just talking about, of the 2.4, 2.6 billion, 70% of this is UAE-based companies, about 30% are Saudi-based companies.
Yes.
And the Saudi-based companies are looking to grow within Saudi. The UAE companies are to grow a little bit in UAE, but primarily is to expand beyond. Because the companies here are not just headquartered here servicing UAE only, they're here, but they're also servicing global demand for different types of businesses.
Right. No, and I think there are also, like you mentioned, there are so many opportunities, and one of the opportunities is collaboration of private credit funds with the banks. Just recently, a couple of weeks ago, BlackRock partnered with Emirates NDB. So I think this has been happening in the West a lot. So I think this is the development that's going to take place in the region as well.
Lara, you brought up a really excellent point. While the West is cutting edge, they've started a lot of these different partnerships, and we kind of emulate some of them where appropriate. The BlackRock deal that they did with Emirates NBD is a great one, but it's really a distribution story. It's enabling distribution of products of BlackRock private market products to Emirates NBD customers. They still haven't crossed over to the other side. We're saying, let's start servicing, let's actually start providing loans from our private credit funds to these underlying businesses that are Emirates NBD customers. That would be a phenomenal change. But that requires local know-how. That requires the BlackRock teams who are on the ground, who understand and assess the credit regionally, not sitting from London or New York. What I would love for us to develop further, there is a bit of development happening as we speak. The allocators, the larger allocators started shifting and giving money to folks like us and others. That's one segment that's developing. The other is tie-ups with the development banks regionally, particularly UAE and Saudi, to figure out how can we be viewed as private credit managers in light or similar light as banks are doing, getting favorable terms or favorable leverage if possible. And the third is the all honest low-hanging fruit is tie up with banks, whether it's Bank Fab or Emirates NBD, where to say, look, you're looking at X amount of, if we're seeing 2.7 billion, I'm sure they're seeing 4 or 5 times that, if not more. There are loans you're not going to do just for the sake of risk tolerance. You're not going to do it. So rather than each person or each entity sitting with a kind of a moat mindset saying it's me or nothing, But what if there's a collaboration, as we're seeing in the West, we're seeing in the US, where say, okay, KKR does the deal with different banks in the US to say, let me look at the loans that you're not doing. You know, they're performing loans, but you're not actually giving them loans. That's, I think, would be but that takes buy-in from the leadership of these banks to say, because it's not going to come from the ground up. It's going to come leadership to say, this is an opportunity set where the entire ecosystem, maybe some sort of incentivization program through the government to say, if you have this, then we will give you this. If you do this, because you're not going to be able to do $10, $20 million loans as a big bank. You're gonna hive it off to somebody else.
Yeah. Thank you. Abdullah, you mentioned that you do collaborate with banks. Does the Emirates Development Bank collaborate with private financing vehicles or private funds at all?
So our main partner, I'm sure you've heard of Beehive. So we've outsourced all our small lending to Beehive. Within, of course, they have to meet our credit and lending policies. But I mean, it's a great example. They're a great vehicle of reaching out to many SMEs. So the SME will go into Beehive, apply, there will be a credit manager in Beehive reviewing it, and then we will be dispersing the loans from our side by using Beehive as a vehicle. So this is one partnership and one successful partnership that we have. We also partnered with some of the fintech in terms of Watermelon. I don't know if you've heard of it, where farmers can discount their invoices with big retailers. So we're providing limits to them, and also other fintechs for invoice discounting. So if you're a company and you have invoices from, for example, healthcare or with large corporates, through these platforms, you can discount your invoices. So we're trying to work as much as we can with different fintechs. We're trying to enable them, and we're trying to make them successful. So the biggest example, I would say, Beehive, and we have several smaller fintechs that we give them the opportunity, and we provide them the limits, and these small businesses can discount through their platform. Other partnerships, I mean, really the success really of our bank, we're a bank of 300 employees. Our success is mainly driven through our partners. And we've partnered with all the free zones in the UAE to finance their factories. They've brought in many leads, even coming from outside, so that we finance different FDI opportunities. Worth of FDI we brought in. I mean, the result of our loan is bringing in 7 billion dirhams worth of FDI since the launch of our strategy. I mean, the main success is partnerships. We cannot work in different silos. You will not be successful. It's not a one-man show and everything. This is why we're very open in meeting new partners. We're very open into listening to different opportunities. We have models that we have been success in, like Beehive, and we're looking for, again, even currently, we're looking for new partners to work with and to help disperse our loans into supporting SMEs. Again, I would like to thank the free zones, the local government entities. They've all been supportive. They like our programs. Our sectors, again, are not the typical real estate or retail sector. It's sectors that the government really wants to focus on, really promoting, for example, made in the UAE products. And this is where we come in and we support these businesses to grow. And not only grow, again, these businesses, we are not a lender to these businesses. We are also as an advisor to them. We're a federal entity. Tomorrow, if they ask for, they want to reach any of the free zone, any of the authorities, we become their voice even into relaying whatever challenges that they have. So they are not our customers only, but they are also our partners, and we help enable these sectors.
Thank you. And to emphasize also the government initiatives, they are very ambitious. The UAE Ministry of Entrepreneurship and SMEs, 3 of the goals is for UAE to be an entrepreneurship nation by 2031, have 2 unicorns by 2031, and be one of the top 3 nations in the Global Entrepreneurship Index. So very ambitious goals, and a lot of opportunities.
Yes, I mean, I just want to add, just to your point, I wouldn't say the companies that we finance, reach the unicorn, but we're proud to. We have several and excellent examples within companies with our portfolio. They started as a small factory. Now we're financing their phase 3 and phase 4 of their expansion. We took that risk with them. They've worked closely with us, and we supported their growth. Different manufacturing facilities from Dubai, Abu Dhabi, and Sharjah. We've increased our exposure. We've increased with them, with our financing exposure and our support to them, because we want to give them, we have the confidence in them managing their business growth. At the same time, we are taking a risk in supporting them. So we have a larger, I would say, larger acceptance of risk. And the result is that they have become bigger. They have become one of the engines in the economy. They have a strong export footprint. They have a global footprint. They're selling globally, and we're really proud of that.
Fantastic. Thank you. So I would like each of you just to share some future outlook, last words, brief. If I start with you, Zubair, and then we'll open up for Q&A.
Sure. I think, Lara, I feel, and Abdullah and Umar already touched upon it, I think the syndication of loans at the SME segment will start happening. And it's already happening with platforms like Beehive, where multiple investors share the risk. And I think that is the way forward. This is number one. Number two, that will happen is that some of these SMEs are not able to present a case which we can take risk on. The paperwork is not, their cash flow, their future growth, the aspirations are not really translated in a proposal which is fitting for someone to take a risk on. And that is aided now by technology tools. A great example is QNB Finance Bank in Turkey, where they have not only given services and accounts to SME, but they've given 17 different tools embedded within the SME for invoicing, e-faturas, for ledger planning, for forecasting. So these tools, because these SMEs typically do not have all the money in the world to hire a CFO, hire a CMO, chief social officer, and so forth. So those aids are provided. Hence, they are then getting into a position not only to do business well and grow the business, but also to present to banks in the way that they have higher chances of getting their funding being done. So I think these two things, both aided by technology, in my view, would be in the immediate future.
So again, the main difference that we see, and I believe, EDB is a pioneer of, when we lend a greenfield or a brownfield project, usually, typically, the commercial banks will look at the existing EBITDA of the business, and based on that EBITDA, they will lend them a specific amount. We tell customers, no, give us the future cash flow, and we lend on the future cash flow, and we take the risk on the future cash flow of the business rather than the existing business. Although, because we give the customer, yes, you know how to do the know-how, you're on your second phase of the expansion. We see how experienced and confident he is in doing this expansion. And again, the positive impact on the overall economy from his expansion. Therefore, we provide him the facility that he needs. And this is a main differentiator between us and the commercial banks, because we don't take risk on the existing business, but also on the future cash flows. And this is what made EDB successful today. This is how we reached the 16 billion, is because we believe in the businesses that we finance. We are not just a lender. We always, each and every individual that we meet, we say, no, we are your partners in your growth. This is how we start off a meeting with every company and corporate that we, or any SME, I would say, that we meet. Again, there are many programs that we're working on, many successful programs that we're expanding on, and inshallah you will see these announcements coming from us. Even in our EDB 360 platform, where an SME can open a bank account within 48 hours. So this is unheard of 6-9 months ago. Now he can open his account 48 hours, can put his deposit, and more services are, and put smart savings and all of these typical services that you will get. And it's fully digital, so there is no branch. Download it from your Apple and Google store. And the reason why we call it 360 is because we want to have all the services, everything in this application, just to support SMEs at any level. Even if you're an entrepreneur starting your business, you have your trade license. You know, the government is supported the SMEs in opening their trade license within 48 hours. So why not bank accounts also? And this is where we are successful now. And we see a positive outlook in SME funding and SME financing. And of course, and we all know that SMEs are the backbone of any economy. And this is where the government is focused on, and this is where Emirates Development Bank is focused on.
Thank you, Abdullah. I think the music to my ears is when we opened our 4 years ago, before the program was launched, opening a bank account for a private credit firm took us quite some time. So yeah, we're still, no, it really took an incredibly long time. But nonetheless, we really love what folks are doing, and hopefully what we are seeing, I think the next stage of growth for our ecosystem will be through collaboration, through partnerships. So similar to the Beehive model, what we're trying to do is we're trying to find collaboration with development banks, particularly in UAE, particularly in Saudi, as the two, again, these are our ecosystem, this is where we invest, this is where all our track record has been. So collaboration with either not regulator, but development banks, collaboration with banks, which conversation started a couple of years ago, but now it's becoming more of a reality that they need to do something and they see the opportunity set. And I think the interesting thing is unlocking other allocators from the region, whether it's sovereigns, pensions, and endowments that typically currently don't have allocation to our region, unlocking that, even a small 5-10% allocation from their overall book, or even a 5% book, can really make a big difference in how we distribute loans to the ecosystem. And that's, again, we're not asking for these things as a token. It's an actual financially sound. So we compare our rates of returns to Western peers, and we want to basically be looked at as international playing field rather than just a token investment because we're Abu Dhabi based or Saudi based or whatever the situation might be for other firms. So collaboration.
Yeah, I think the outlook is promising, looking to the next coming years, especially when you compare our time to 20 years ago or 10 years ago. The awareness of the population in the Gulf region has increased rapidly. Many entrepreneurs are thinking about sustainability of their businesses, not just being successful in 1 or 2 or 3 years. They're looking for the sustainability in the long term of their businesses. They are also thinking about the scalability of their businesses. They are not just looking to open like a small business immediately, but they are thinking about, after opening the small business, how to expand, how to go to other markets inside the region and even globally. And this is where again our role comes, where we are providing them with the needed consultancies, with the needed R&D to how to sustain in the market, how to reach sustainability, and how to reach scalability in the long term. Also, the awareness of the government initiatives, like also working with the SMEs to introduce them to many different initiatives of the government. Especially in Saudi Arabia, there are many governments addressing many sectors. There are initiatives like addressing like health sector, industrial sector, farming sector, etc. So there is specific funds and specific initiatives in each sector in Saudi Arabia. So we are helping SMEs to connect with or matchmake with the initiatives and funds they are needing to develop their business. So I think, especially with the young generation here in the GCC region, with most population are under 30 or 35, up to 60% or 70%. very energetic young generations looking forward to enter the market, to be entrepreneurs, to be successful, to expand globally. So it's a very promising market, a very promising ecosystem, and very committed governments to build a very successful and very sustainable ecosystem. So it's very promising going forward.
Yeah, I mean, I agree with that. Really. I mean, the commitment of the government to facilitate change is extraordinary, and so legislation does that. So, you know, if you look back historically, there was an issue whether you could take security over shares in a LLC, local company. That's been changed. There was an issue of security over movable assets. That changed. They introduced insolvency law in 2016, which wasn't great, and they were issued in the courts because the courts didn't understand the process. So they've set up, with the new laws, a specific bankruptcy court. So what's great about living in this environment is the government really listens, and the changes come through very rapidly. And I think all of the changes in legislation over the last sort of 5 years have really opened up opportunities for SMEs here. The banking has been a massive issue for the last, 8 years. I mean, you know, it's been a hot topic for all of our clients coming into the region. Is great, we can get a company set up, we can't get a bank account. That's the works. So it's really great news to hear Abdullah say that there are opportunities to set up bank accounts much more rapidly, because that really has been a hindrance. And I think that again has been recognised at the highest level, and I suspect that Abdullah and his team were under pressure to find a solution to that, and it's great that those solutions are coming.
Great, thank you. Well, it's clear that yes, we will open, so it's clear that the ecosystem is evolving, the legal framework is advancing, and that the numerous government initiatives taking place. There's clearly growth, and the environment is becoming more robust, more sophisticated, and more attractive for investors, hence more opportunities for the SMEs. But we would like to open for Q&A. I think you started first in the back.
All right. Hi. So I run a payments company, and we are focused on now lending. So my question to the panel, and more of a comment and specifically to you, Abdullah, is that what we've seen engaging with a lot of SMEs, that when it comes to access to capital, more than a term loan, they are looking for short-term working capital. I think that's where the SMEs have the biggest problem when it comes to working capital. So when we are a lending company here and we were looking to partner with an EDB or an institution that wants to partner with lending on the SME system, how can we look at partnering together?
We're more than open to partner with you or any entity. Even with Beehive, we started with them in term loan. Now I believe, be corrected if I'm wrong, we also provide, or we are going to provide, if not already provided, working capital limit through Beehive for small and micro businesses. So we're open to have that conversation. And again, if it's related to supporting small businesses and SMEs, which falls under our priority sectors, we're more than happy to work with you and to explore areas of collaborations and how we can support you in that. Because we're working with more than 5 fintechs right now at the moment with different programs, and we're open to have the 6th, 7th, 8th fintech to work with us.
My question is to Abdullah. So the penetration of funding to SMEs is very low because they're considered more risky. How do you manage that risk? What are your current sort of, if you could throw some light on your NPA levels, how do you classify them and how do you manage them?
I mean, our NPL level, without disclosing, quite low on the mid corporate, and on the smaller maybe it's a little bit higher, or on the high little bit higher. But we have a very strong credit policy. We have a very capable credit team that looks at the underwriting very well. Again, we don't want to lend to a customer at the end of the day, 3-4 months down the line, especially on the smaller segments where he will default on this loan. We try to not have that problem. And even the startups or the entrepreneurs, definitely, I'm sure that they ask us for loans, but you know, the most important is the repayment. And if the repayment capacity is not there, or it's, I would say, at a very high risk, we do not give them the loan first before protecting us, protecting the smaller individuals, you know, from being in default and having these problems with the bank. But again, our credit policy is very strong. We have a very low NPL, even if you want to compare us to the commercial banks. We have a very low NPL lending to smaller and mid-sized business. How we define SMEs, as we look at the government definition of SMEs, is 250 million dirhams of turnover. Based on that, this particular segment, we have a very low NPL. And we've managed to disperse 16 billion. So this is something that we're very proud of.
Good morning. Thank you everyone for spending time here this morning to share your thoughts. Thank you, Lara, for putting the panel together and hosting it so excellently. So I'm Tanveer Shah. I run X Square, which is a business-only SME-focused fintech super app, and we're launching credit in there as well. My question is for Omar, and you mentioned Western markets that we can learn from and benchmark. In the US, the reason private credit works very well, or even commercial credit, is it's backed by secondaries. You can offload your book, both good book as well at a premium and bad book at a discount as well. At the moment, we don't have that active secondary market in the region. Is that something that you see developing? Are you working on it? What are your thoughts on that?
Sure, thank you for that. And it's an excellent point and observation. Yeah, look, it goes back to the point I alluded to earlier, which is, while we're seeing 2.8 billion just worth of great opportunities, we're only doing 4 to 5% of those, right? So just by sheer firepower, there's not enough for us to do the primary deals, much less create a secondary market, right? So it's kind of like, in order to get a secondary market to be in a healthy level, you need to do a lot more deals here on the primary side. And to get more firepower to do primary, we need partnerships with your development banks to give us similar terms that they get maybe to other banks or other platforms, or to get allocators from the region to give far more firepower. To give you an idea, so we've raised, our first fund was $184 million, right? Which we're just about to announce closing it soon. But it took us almost 3.5 years to raise that $184 million. Why? Because almost all the allocators that would be willing to do this was their first time allocating to the region. So it took them 1.5 to 2 years to do DD on us, whereas our peers in the West, it's 3 to 6 months to get a decision. So it's a growing problem. It's not a problem that's not solvable. So we just need more firepower to build the primary market to a sizable enough so then secondaries can exist. Because right now, you're absolutely right, secondary doesn't exist because there's barely anything happening with scale on the primary market. So when is it ever going to go to the secondary market? It never gets to. That's why in the US, the depth of the market is phenomenal. I mean, you have from lower mid-market to large cap. Private credit plays across the spectrum, and there's secondaries across all different. Here, we're doing senior secured lending with mezz-like returns for investors, but still, we're still a long ways away from getting a sizable primary market because of the function of how long it takes to even raise a $200 million fund or $400 million fund. So I think it's that dynamic that needs to evolve.
The US, because it's a really young market. People just have to remember that it's a really young market. But that's the opportunity. There's this great opportunity because it is a young and emerging market. But to try and compare it with the US, it's just not the real world. And that's across it's not just in credit, there's not a secondary market in all sorts of there's a whole raft of areas where there doesn't exist a secondary market yet. But it will come and it will develop, and that happens in a developing market. So I think it kind of there has to be an element of patience around it as well. But as I said, I think the government does everything it can to really sort of push it forward. But I do think there's got to be a bit of patience and recognition that we are in that kind of developing market.
I'm running a wealth management company, and one part of my activity is venture capital. And is there some funds on some new initiatives to raise money for new developing projects, as mostly funds and GCC are focusing on the cash flow producing side when you are talking about the business model, etc. So is this new initiatives about the new existing companies and new startups? Thank you.
Bit to that. I mean, the venture market really is closing that gap of that where it's pre-revenue really. So EDF can't lend to companies unless they've got cash flow that supports the lending, and so the venture capital market here is really kind of supporting that early stage startup, and it is quite developed here. Obviously there have been challenges because what you saw, particularly sort of going back 4 or 5 years ago, was this huge sort of growth of safe investments, but really giving very limited security to investors, and a lot of that was kind of angels, stroke early venture funds investing in that. But a lot of those are caught cold because actually the reality is it always takes a lot longer for startups to get into sort of meet its business objectives. So, for example, we've just done a transaction last week where the company was buying out, the investor was taking out something like 14 safe investors. But you could see over the period of that investment that sort of they reinvested over a 5-year period. And it just, that market across the globe is a challenging market. But there is for sure, a gap, I think, at that early stage. But there is an investor community, a venture community here. So it's just trying to plug into that.
One more question.
Hi, good morning, guys. Thank you for some great insights today. Really appreciate them. I am Ritesh. I run a national consulting firm helping SMEs to raise debt funding. So my question is specifically to Zubair. Do you think financing in SMEs or funding them to grow, is that only a supply problem where supply is not available at the levels which are required to meet the current demand of funding? Or is it more of a knowledge and awareness problem where SMEs are, first of all, not aware of their own financing situation, as well as are also not properly aware of all the solutions out there? What do you think about that?
I think it's the later, and the latter because the financing products like warehouse financing, invoice discounting, much linked with the running of the business, and those elements are sometimes not represented by SMEs in the fashion that the bank can take risk. So definitely it's the latter in my view, in terms of knowledge, awareness, and that's how we've seen businesses helping SMEs, and banks also prefer that knowledge being passed before the proposals come in. In terms of within banks, and I think EDP and SME Bank in Saudi, they have large funds available. But even with banks, SME does remain to be the highest profitability segment. Banks would love to put money there, right? But the risk is so high profits, high rewards, high risk. So if that can be neutralized by even third parties, creating that education, that I think is a space for you to explore and work into that. Yeah.
Hi, morning everyone. So I'm Hitesh. My family has been running SMEs in UAE since the last 30 years. Now, one issue that we've been facing in the last decade or so is that the cost of borrowing capital has gone up considerably. 10 years ago, we were able to borrow at 7% annually, 8% annually, collateral free. Now, even with margins and all, we're borrowing at 14, 15%, which sometimes makes it unappealing to borrow, which has hampered our growth or ability to grow so much. Is there any initiative that is happening where banks are being asked, even if someone does qualify for it, their interest rate should be capped at a certain level or something, so that the money that actually comes in helps them grow, not just churn the wheel? Sometimes in SMEs we do end up facing that issue, right?
Yeah. maybe Hitesh, let me try and then my colleagues can jump in. So banks operate on risk-based pricing, right? So the higher the risk, they have to cover it with the higher the price. So 2, 3 elements play there. The first one is if the bank is able to look at you from a 360 perspective with all your other relationships, invite you to bring your businesses from other banks to this bank, right? Why are you doing FX transactions in bank A and asking for lending in bank B? Those kind of conversations can take place to reduce the price component because the bank ends up making more money from your relationship. So this is one. The second aspect is that if you do portray a higher risk on the table in terms of your proposal, you should be prepared to pay a higher price. The third element is this is opening up to private equity, private investments as well, because now there are groups forming, which just by a group of investors coming together, you firstly distribute the risk, and hence the the pricing can be adhered to, or you create a compound effect. So these are the three. This third option is also available to you. You don't have to go to banks all the time.
All of them sometimes that's available for more, let's say, technology-based business or something. But the traditional businesses, that have basically been from the start in UAE, that have been sort of the spine that now they are finding it difficult to borrow sometimes, because of which their growth is getting hampered. So anything that I may not have known.
I mean, look, we look at our clients or our prospects on a case-by-case basis. The first thing that we look at is the company's health and the financials of the companies and how solid are the books are, right? Again, if the customer is if customer has a low turnover, very low profitability because X and Y and Z, like my colleague mentioned, the price or the risk gets higher, and also it depends on the industry he's working in. So if he's mainly and I mean the exposure of who are your customers, right? Do they pay you on time? Do they not pay you on time? So it's a full credit assessment that we conduct. So we don't have, the way we work is we don't have a checklist. We look at the client, we sit with the customer, we look at their books, we look at their financials, we look at their receivables, and based on that, there is a price that's decided. Now, the commercial banks, generally, their return on equity is 15 to 20%. Our return on equity is 5%. So this differentiates us in terms of our pricing between the commercial banks and us and as a development bank. So we take minimum profits on whatever deal that we close, just to self-finance ourselves and to become, to have our own books to become healthy. So there are many, unknown factors to your question, because you're relating it to your own experience. The way I see it is the IBOR in the recent years increased because again, we are pegged with the US, so the cost of funding across everywhere has increased to a higher level. SMEs typically receive, I would say, all in, including IBOR, between 7 to 8 to up to 15%. That's there in the market. This is decided by the commercial banks because people are taking loans at this rate. I would say, again, it depends on the sector, the segment, the securities that are provided to the bank. This is where they can reduce. And like you said, if a customer comes to me and tells me, okay, I'll do my FX transactions with you, my cash flow will be routed with you, this will help reduce the cost of funding. Thereby, you could negotiate a better deal. And the second point I always tell my customers is, please don't work with one bank. Get multiple banks, because it allows the SME to have leverage in terms of negotiating. So if the customer is not using one limit with a specific bank, they say, okay, reduce your rate, reduce your pricing. Let's discuss how we can take this forward. So there is always have to have an active conversation between the company and their lenders. And this works quite well. Yani I've seen customers overall across the range of banks, they've reduced their prices significantly, starting from their highest rated bank. They'll say, okay, I will not work with you. I will work with your competitor if you don't reduce. And they come and down and they reduce. But it comes down overall to the health of the company itself and the riskiness of the company itself. Because I've seen SMEs, believe it or not, have very low prices. And because they manage their books very well. And I've seen SMEs with high prices because of the industry they are engaged in, or because they cannot receive their cash on time, or because they have several, issues that they cannot control. And you know the market very well. So there are different indicators, and there is not one answer to your question. It's always on a case-by-case basis. But I've seen SMEs receiving price similar to corporates, honestly.
There might be an opportunity to explore the platforms that are private credit platforms that have been set up in DFC and ADGM, where you have private vehicles subscribing to the platform and SMEs. This creates transparency and competition, so you can work with several of them and see where you get the best terms. We have a online question from LinkedIn. Given global capital's increasing preference for ESG-aligned investments, how do GCC financial institutions plan to incorporate ESG criteria into SME financing decisions without reducing liquidity access to SMEs that are currently not ESG compliant?
When we launched in 2020, one of the decision trees that we kind of faced was, do we want to incorporate ESG, and what does that mean, especially in an ecosystem which clearly will have exposure to carbon footprint or whatnot. So we're still going to trade in it. We're still going to invest in energy, or at least finance energy projects. So we did. So we are actually an ESG firm. So in every loan documentation, we have different factors that we assess based on. We use the SASB model, so it's based on sector. So we don't ask the same question for a business that's not relevant. We ask the right questions for the right businesses. Typically, it's the governance and the social that usually needs a bit of tweaking. Environmental, luckily, whether it's in UAE or Saudi, there's really strict environmental laws. So it's very rare that a business is not already meeting these expectations based on the government requirements. So that's usually not an issue for us. But typically, we have things that we say it's linked to the loan, in the sense that we'd like them over the life of the loan that we have for 5 years, we'd like to see improvement in their ESG score. So in the beginning of the investment, we assess part of our due diligence. One metric of the many metrics is what's the ESG score of this business today as we're entering this loan agreement? Where would we like it to be in improvement in year 4 and 5? Now, we don't have any penalties per se for this current fund, because again, we're the first ones to do that. What we've seen globally is people linking the loan rate based on the various milestones on a quarterly basis. We haven't gotten that far yet, honestly. I think there's been also a big kind of almost shift back away from the word ESG globally. I mean, it's not, even the largest managers, the BlackRocks and others, they're kind of having a rethink of what does ESG really mean, all right? So for us, social and governance is always important anyways. The environmental hasn't been a factor for us, but we incorporate it into all our loans, but without any real stick. It's more of a carrot rather than a stick.
Let me add on Omar's point. And there is a banking system which lends itself almost natively around the ESG principles, which are designed to be for the benefit of the planet and the social norm. And that is Islamic banking. And we know the Islamic banking ethical systems do finance businesses which are profitable to the community, as opposed not to. And Islamic banking remains to be the largest growing segment of banking in the world. In Europe, there is a huge demand of Islamic institutions and Islamic financing, which is not yet being met to its full potential. So one can think of that in this fashion as well. So if you have this ESG component and ESG positions in UAE specifically, within the banks have been filled just to create those processes and governance internally, so that it addresses servicing, credit, all functions of the bank. Finally, a point that I'm working with a company called Chorus, which is a research company in the world, to build an Islamic banking community globally, because there's such a big demand from Africa, from Australia, from Europe, and we want to address that, bringing Malaysia, Indonesia, UAE, and Saudi, the Islamic models together. And the whole idea is to have the ESG kind of built in natively as a design principle within that.
Any? Oh, yeah, go ahead.
Good morning, everyone. I have a question to Omar, heading the M&A department of my company, and question is to everyone. Just want to have your insight regarding the different finance structure that we can put in place in order to acquire a company, notably LBO, convertibles, just to have insight about how going on here in the market, if it's growing, and how we structure that here. Thanks.
Look, there's no two loans are identical, i.e., similar to Abdullah's point, there's no necessarily a blank template with checklist that says you need to do this, this, this for us to actually look at the loan or consider it. The way we look at it is the healthiness of the current business, your thesis on where the use of proceeds will be, are. So if in case of an M&A, how does the healthiness of this cash flow business as a combined entity, first as its own, then as a combined entity. Look, there's really 4 levers of us to generate our returns, which effectively obviously means what you're going to be paying as somebody who's taking a loan from us or investment, private credit investment. One is upfront fee, which is one part. It's some small minor amount. This is not that significant. The cash yield, so that's anywhere from 9 to 12%, depending on the growth of the business. Is it a growth story? Is it a kind of steady Eddie type of business? Then sometimes we can structure a PIK, so pay in kind, so you get non-amortizing for the first couple of years or 3 years, depending on the cash flow of the business. And then sometimes if a business is quite a growth story where they don't want to pay so much on the cash component and the PIK, we may actually structure a warrant, a synthetic warrant, and that can range anywhere from 1% up to 10%, depending again. So with these 4 levers, we discuss, because this partnership can only make sense if your business actually grows in this deal. If we're able to generate returns as Ru'ya, but you as a business end up in 5 years worse off than where you were before getting the loan from us, then that kills our reputation as well. We're not here in the business of vulture investing. We want to make sure that this is a real partnership based on cash flow. So the discussions that go back and forth with these business owners typically end up being, what are your use of proceeds? Is it purely an M&A, or is it an M&A as well as you're going to expand growth more? You're going to spend more on marketing or whatever the case may be. Then maybe you don't want to put so much money on the cash burden part. You don't want to pay more than 10%. Well, then we're going to structure something more toward the warrant and PIK, right? So these 4 levers are interchangeable based on what our end of day, we need to make at least 15% for our returns, upward to 18%, somewhere in between there. Some businesses, we were clearly from day one, we know we love it, but we're never going to make more than 16%, and we're okay with that risk. Some businesses, we see there's a huge potential. We're looking to do more than 18, 19%, but also give you the right equation for you to grow. Because if our financing doesn't make you grow, doesn't help you grow, then it's not a partnership. It's a vulture banking, I would say. I mean, there's other means. I mean, there's professional banks that are giving loans, and there's individuals that give you loans. And there's a lot of great wealth in this country where there's individuals may sometimes give on a one-off basis. They know this person, they know this company, and they can give whatever terms they give. It's not structured in the way we're doing it. So it's structured, it's flexible, and it's a partnership mindset. So we're happy to discuss whatever the case may be for your firm. And we have a rather quick turnaround time. We have a weekly meeting with our partners, my partners and I, where we look at every deals that come up that week and say, is this something we want to proceed with? Or is this something to proceed with? Let's sign an NDA. Let's start talking. But even with that, on a best case scenario, 3-month investment, takes 3 months from first handshake to close. On a worst case scenario, or more realistic, 6 to 7 months. Why? Because it's not so much the concept that we need to flush out, is the inner workings, the security packages, the share pledge that we typically require from these businesses to say, we're going to put everything in a EDGM or DIFC, we can apply English law. Are business owners comfortable with that or not? Some of them have never heard of that concept of a share pledge. So That's what takes the longest time. But the early discussion is say, is this a business that we can support with our loan structure? Yeah. Some of them we just say, it's not for us. We just simply amicably walk away.
Okay, well, thank you very much, everyone. It's clearly that the SME ecosystem is evolving with a lot of growth, a lot of opportunities. I'd like to thank the audiences and special thanks to the incredible panelists. Thank you.